Trump declared war on China. Tariffs. Headlines. We're standing up to Beijing. We're bringing the jobs back. In America, both parties said the same sentence for the first time in years, and right in those same years, BlackRock, JPMorgan, Goldman Sachs quietly moved $1.4 trillion into China's markets. Note, not $105 billion, $1.4 trillion, and the peak year, 2020, the hottest year of the trade war. Now a normal person would think, bad timing. Wall Street misread the politics. Something unexpected happened. No, this was one of the most predictable moves in modern financial history. Because this wasn't a mistake. This is a mechanism that has repeated for 300 years. And right now, we are in stage 3. And if history is repeating again, stage 4 may have already begun. Welcome to Financial Chronicle, where we uncover the mathematics behind power. In 2018, America said it had launched a war against China. But the real battlefield was never the television screens. The real battlefield was money. Because in those same years, the world's largest investment funds began flowing into China. And this flow wasn't the decision of individual investors. It was the decision of the system. Index providers like MSCI started adding Chinese stocks into global benchmarks. It looked like a small technical adjustment. But in finance, that is not an adjustment. It's an order. Because pension funds, insurance giants, and university endowments that track those indexes are forced to move money into China. So while Trump was raising tariffs, Wall Street was doing something else. It was building the capital center of the future. So the question is, was this just profit? Or was it the beginning of stage 4? The most critical detail in this story is this. Wall Street didn't go to China because it believed in China. Wall Street went because it was forced to. Because in modern finance, what controls money is not the news. It's indexes. Companies like MSCI decide which country is considered investable. And the moment that decision is made, the largest pools of capital on Earth move automatically. When China A shares began entering the indexes in 2018, it wasn't just market news. It was the rewriting of global portfolios. And the most striking part is this. By 2020, China's weight inside the MSCI Emerging Markets Index had reached massive levels. So the world didn't choose China. The system turned China into a mandatory target. While Trump was fighting on stage, the algorithm was working in the background, and money quietly changed direction. At this point, most people still believe this is just investing. This is just profit. But history doesn't work like that. Reserve currency systems rise through the same cycle and end through the same cycle, and that cycle has 4 stages. Stage 1, a central bank is created. A monopoly over money is established. Stage 2, that monopoly expands the state through debt, wars, programs, empire, and everyone says this time is different. Stage 3, the system grows too large. Debt rises faster than production. The currency weakens. Trust begins to crack. And stage 4, the darkest one. Because in stage 4, the people who built the system move the money to the next rising power before the collapse becomes visible. And what's left behind is everyone who was too late. The first major modern example of this mechanism was Britain. The year is 1694. Britain is at war with France. The treasury is empty. The state can't find money. And then one man appears, William Paterson. The solution looks simple. The Bank of England. The government borrows from the bank. The bank gives the state £1.2 million. Interest, 8%. But the real genius isn't even there. The real genius is this. The state creates debt. The bank converts that debt into money, and that money enters the economy. And the bank's shareholders collect interest from the nation's money system forever. So money is no longer something owned by the public. It becomes the product of a private machine powered by debt. Stage 1 was complete, and within just a few years, Britain's debt exploded. After the Bank of England was created, Britain's destiny changed, because now the cost of war was no longer paid with taxes. It was paid with debt, and every new debt produced new money. In just 4 years, Britain's national debt jumped from £1.2 million to £16 million. This wasn't a side effect. It was the engine of the system. By the 1800s, Britain financed the Napoleonic Wars through constant borrowing and monetary expansion. By 1815, the debt had reached £885 million. And at that point, something happened. The lenders didn't just make money. They effectively bought the state. But the public didn't see it as collapse. The opposite. The empire was expanding. The navy was growing. Colonies were multiplying. And the pound was becoming the world's reserve currency. Stage 2 was working perfectly. But like every system, it was approaching its limit. By the early 1800s, Britain was at its peak. Global trade moved in pounds. Foreign governments held pounds as reserves. The empire ruled nearly half the planet. From the outside, it looked unstoppable. But inside, something invisible began. Industrial production. Britain was still growing, but Germany and America were now growing faster. And that gap didn't close over time. It widened. Because what holds an empire together is not just a navy. It's production, efficiency, real economic power. And Britain was carrying an empire that was becoming more expensive every year. Protecting colonies, controlling sea routes, constant military spending. That cost began rising faster than what the country could produce. And in that moment, the first signal of Stage 3 appeared. The system was still expanding, but it was no longer getting stronger. And once the cracks begin, the financial world sees them before anyone else. When Stage 3 begins, collapse doesn't come immediately. First, something else happens. Money changes sides. As Britain's cracks grew wider, the smartest capital on earth picked a new target: America. From the mid-19th century onward, British capital flowed into American railroads, American steel, American industry, American growth. From the outside, it looked like normal investing. But in terms of the mechanism, this was an early version of Stage 4, because the architects of the system already knew one thing. A reserve currency always falls, eventually. And when that day comes, the biggest winners are never the ones who hold it the longest, but the ones who leave first. In 1880, the British public didn't realize this. With their own money, America's future was being built. And once that construction was complete, there would be no way back for the pound. One empire was declining, while another was being born in silence. And here's the terrifying part. The same transfer may be happening again. Britain's decline didn't begin with a war, and it didn't end in a single day. Because when a reserve currency dies, until the very last moment it still looks alive. The pound was still circulating, trade was still done in pounds, the empire was still large on the map. World War I broke Britain's financial limit. State debt exploded, the gold standard was strained, and finally, in 1931, Britain abandoned the gold standard. This is often explained as a technical decision, but in reality, it was this. The pound, as a reserve currency, could no longer produce trust. And the most critical detail, by the time that day arrived, capital had already moved. America's industry had been built. New York had grown. The financial center had shifted. So when the pound collapsed, the architects didn't lose, because they had already entered the new system. Stage 4 worked perfectly, and the world, by the time it realized, it was too late. Now let's see the same mechanism through a faster and more painful example. Germany. When World War I ended, the Treaty of Versailles placed 132 billion gold marks in reparations on Germany. It was a debt that was impossible to pay, and the Weimar government was left with two options: raise taxes or print money. Taxes would trigger rebellion, but printing money would keep everyone calm in the short term. They chose the printing press. The Reichsbank began buying government debt. Strikers were paid. Social programs were financed. The coalition was kept alive. From the outside, this looked like crisis management. But in terms of the mechanism, this was an accelerated version of Stage 2. Because by printing money, you expand the state. But after a certain point, money doesn't grow. It only loses value. And in Weimar, that point was very close. By 1923, Weimar had lost control. In January, France and Belgium occupied the Ruhr region. The goal: seize coal and industry and force reparations payments. Germany's response wasn't military. It was economic. The government told Ruhr workers, "Don't work," and it financed them with state wages. Of course, those wages were printed money. From that moment on, the money supply went insane. May 1923, 8.6 billion marks. June, 17 billion. August, 669 billion. November, the numbers stopped meaning anything. In the end, $1 became 4.2 trillion marks. A wheelbarrow full of cash couldn't buy a newspaper. People were paid hourly, because a few hours later, their wages had no value. And this is where the middle class was erased overnight. Stage 3 looks exactly like this. The system still appears to be functioning, but the money inside it is hollow. Weimar hyperinflation is usually described as incompetence, as if the government panicked and lost control. But the most disturbing part of this story is this. During the process, the Reichsbank president, Rudolf Havenstein, bought foreign currency with the mark, at any cost, even as inflation rose, even as the exchange rate went insane. The official justification was simple: we have to pay reparations. But British and French observers at the time said something else. This was a deliberate destruction of money. Because hyperinflation had a benefit. It melts old war debts, resets the state's burden, and most importantly, it destroys the middle class. When the middle class disappears in a country, two things remain: the ultra-rich and angry masses. And in that environment, politics is no longer run by logic, but by crisis. That's what happened in Weimar. And this wasn't just Germany's story. This was the mechanism itself. When hyperinflation reached its peak, Germany became unlivable, and in November 1923, the Rentenmark was introduced. The bleeding stopped. The system regained the appearance of order. But there was a price, because Weimar's recovery didn't happen through its own strength. It happened through foreign credit. In 1924, the Dawes Plan arrived. Money from America and Wall Street began flowing into Germany. Banks, companies, investments. When a country emerges from crisis, foreign capital can look like it is saving it. But in terms of the mechanism, it is something else. It is the system being repurchased in the middle of collapse. And the most critical detail is this. That money entered Germany at its most expensive moment. And then what happened? When the system collapsed again in the 1930s, when political disaster began, that same capital had already positioned itself for the next stage. So what happened in Weimar wasn't just inflation. It was a country being redesigned inside a crisis. And if this mechanism worked once, it works elsewhere too. Now we arrive at the third example, the system that became the foundation of today's world. 1444. Bretton Woods, New Hampshire. 44 countries came together and built a new monetary order. The US dollar was tied to gold. $35 equals 1 ounce of gold, and every other currency was tied to the dollar. Which meant this: global trade would flow through the dollar. Central banks would hold dollars as reserves, and if they wanted, they could convert those dollars into gold. For America, this was the greatest advantage in history, because at the time, the world's largest gold reserves were sitting inside the United States. For the first 20 years, the system worked perfectly. Europe was rebuilt, Japan rose, dollars flooded the world, and America's power looked absolute. But in every reserve currency system, the same breaking point arrives. The state begins to believe this power is unlimited, and in that moment, the limit of Stage 2 begins to appear. The Bretton Woods system was built on one thing. Dollars could be printed, but they had to remain limited by gold. But after the 1960s, America forgot that limit. The Vietnam War, the Great Society programs, Cold War spending, all expanded at the same time. And the most critical detail was this. America didn't raise taxes to finance them. It printed dollars. The Federal Reserve expanded the money supply. Interest rates stayed low. The economy kept growing. From the outside, everything looked perfect. But the system was hollowing out, because the world was holding dollars as reserves. And America, through trade deficits, kept sending new dollars into the world. At a certain point, the amount of dollars in circulation became far greater than the gold inside Fort Knox, so the dollar still looked as if it were tied to gold. But the mathematics was already lying. And this is how Stage 3 begins. The system still appears to function, but its foundation has cracked, and some countries saw it before everyone else. By the late 1960s, some countries saw the truth. On paper, the dollar was tied to gold, but the number of dollars in the world had grown beyond anything gold could explain. And France made the first move. Under Charles de Gaulle, France told America, "We don't want dollars, we want gold." They began converting their dollars into gold. Then Switzerland left the system, and then something even more striking happened. Britain, the country that once ruled the reserve currency, one of the founders of the dollar system, demanded $3 billion worth of gold from the United States. In that moment, everyone inside understood, this system is ending. August 15, 1971, Sunday night. Nixon went on television, and with a single sentence, he changed the world. We are temporarily suspending the convertibility of the dollar into gold. That temporary decision never came back. The gold window closed. Bretton Woods collapsed. And the dollar was now only a promise. Stage 3 was complete. Now came the most critical stage. After 1971, the dollar was no longer limited by gold. So for the first time, the world's reserve currency became fully fiat, paper, promise, trust. In 1973, the world moved to a floating exchange rate system, and from that day on, the dollar's value was no longer carried by gold, but by America's debt capacity and global power. That's why most people never noticed the collapse, because in fiat systems, collapse doesn't arrive in one day. It arrives slowly, silently, but mathematics always leaves a trace. In 1971, gold was $35. Today, it's above $3,000. That alone tells you this. The dollar, over 50 years, lost most of its value. And this wasn't an accident. This was the nature of stage 3. Debt grows, money expands, money loses value, and the public experiences it as inflation. But for the architects of the system, it is only one thing: time. Because stage 4 needs time to work. And after 1971, the world was given exactly that time. Now the question is, was this 50-year fiat era really stability, or was it simply the longest delay? Now go back to 2018. When Trump imposed the first China tariffs, America described it as a break, a new era, a new war, a new strategy. But in those same days, something far quieter was happening, and this detail was too clear to be a coincidence. July 6, 2018, the day the tariffs began. But just 1 month earlier, on June 1, 2018, MSCI officially began adding China A shares into its indexes. It looked like technical news, but in finance, it means this: trillions will move. Because funds that track indexes do not choose. They copy the index, and as the index increased China's weight, money flowed into China automatically. So two things happened at the same time. Washington was resisting on stage, but the system, backstage, was lifting China. And those two forces were not contradictory. They were the mechanism itself. From 2018 to 2020, America said, "We're getting tough on China." But the numbers told a different story. Because in that same period, American portfolio investment into China exploded, and the total number, $1.4 trillion. And the biggest jump happened in 2020, at the peak of the trade war. In the year the headlines were the harshest. That's why this move cannot be bad timing, because at the same time these things also happened. BlackRock expanded its China operations. JPMorgan received approval for majority ownership. Goldman Sachs increased its stake in its China venture. These companies don't take risks. They read the system. And the system was telling them this: China is no longer just a manufacturing center. It is beginning to become a financial center. And the nature of stage 4 is this: money doesn't run from collapse. Money buys the power shift in advance. But the real question still remains. Was this $1.4 trillion just for profit? Or was the handover of an empire already beginning? Now let's check the boxes of the mechanism one by one. America's national debt, $36 trillion. Debt to GDP ratio, around 98%. The Federal Reserve's balance sheet was under $1 trillion in 2008. During COVID, it exploded to $9 trillion, and today, it's still above $7 trillion. This is the exact same mechanism we've seen in history. A central bank buys government debt. The state spends beyond what taxes can cover. The money supply grows faster than the economy's productive capacity, and in the end, money loses value. So stage 1, 1913, the Federal Reserve is created. Stage 2, wars, programs, global expansion. Stage 3, Debt grew too large. Money is being debased, trust is cracking, and stage 4 is already in front of our eyes. While Wall Street moves money into China, Washington still performs resistance. This is not a contradiction. This is how the mechanism works. And if the mechanism really is this, when the final stage arrives, no one will be ready. Because that stage always arrives the same way, silently, and already in motion. This mechanism doesn't care about your political views. Whether you love America or hate it, changes nothing. Because reserve currency systems don't die from emotions. They die from mathematics. And what we are living through right now is not a conspiracy story. It's a cycle. Britain lived it. Weimar lived it. Post-1971 America lived it. Now the same signals are coming together again. And the most dangerous part is this. Stage 4 never begins on television. Stage 4 doesn't arrive with headlines. Stage 4 begins when money changes direction. While the public still believes the old order is permanent, the architects have already moved into the new order. So the final question is this. As this system unravels, are you still watching the stage? Or do you see backstage that the transfer has already begun? Because this isn't a prediction. This is pattern recognition.